guess I don't sleep. No, I do sleep sometimes. I've actually been observing since sheesh, maybe 9 o'clock. Market actually was looking great up until about maybe half hour, 45 minutes ago. Started to accelerate somewhat, but I'm still up, so I just came on. I actually meant to come on earlier and do the stream, but I was busy doing other stuff, so I was gonna just finish what I was doing and then go to bed, but not that tired yet. Oh, excuse me. Not that tired yet, so just take a look at things, see who's up. I see everybody ain't up, but there's more people on here than I thought would be. Yeah, but earlier, the market was looking real good. There was no trade that manifested during that time, however, so you know, we're disciplined to not do anything until an actual trade comes during the right time. So if it does not come, then we won't end up in a trade because no trade came during the time. So there will be times when the market actually presents the behavior that we're looking for, but it does not necessarily, hand over a trade. But it's cool. It's cool because that's part of the discipline. Part of the discipline is knowing that the market is presenting the right behavior and all of that, but still not doing anything because no trade comes. You have to be okay with that. Muffin Woman, what's happening? I see Visionaire on here. I see Forrest, Stacy, JT. All right. Not bad at all. So typically around this time, and usually it's about 2 o'clock, like 2 a.m. Eastern Standard Time. I think that's when the London session opens, if I'm not mistaken. So when London opens, there's a tendency for the market to increase momentum and to accelerate. Often it may even become volatile. But so far, what I'm seeing is the market really has just started speeding up somewhat. Um, but I'm still gonna observe for a little bit, and then I'll finally go to bed. I guess when I get tired, I'll just go lay down. But in the meantime, I'm still up, just looking. I like to do this too because I think that it's healthy for you to observe and see when the market is actually presenting what we wait for, and then also for you to see times when it's not. You know what I mean? So like, it's good for you to see instability, you know, accelerated environment, volatility. It's like it's good to see all these things because it disciplines you not to have reactions to what you're seeing at all. You know what I'm saying? Like, even though I'm up looking, I'm not in trade mode ever. So it's not that I'm up looking for a trade to come. If I know that just through observation, I'm seeing that the market is not stable, then I already know that the trade is not coming yet because I have to see stability first. So if stability never comes, then you know a trade is not coming, which means that you ignore any setup that comes during the time when the market's not stable. And that's it. That's it. You don't do anything else. That is all that you do. So it's good stuff. Chris, what's happening? Otis, what's going on? Yeah, so I'm actually surprised that y'all are up this late. I really didn't think anybody would come on. And to my surprise, you guys are coming on. So hang on for a little bit, see what the market is doing. So as I was saying, when I first came on, the market was looking real good earlier for hours. When I started observing around 9:30, the market was starting to transition, and then it ultimately became stable, and it remained overall stable for a few hours, actually. But during the time, no trade set up, so there was nothing to do. But it's cool. It is cool. Observation definitely helps you with discipline. It helps you like really on every level because it forces you to be disciplined when you observe because you know that there's nothing to do until the market stabilizes first. So if the market's not even stable, then you know that there's absolutely nothing to do yet. Absolutely. Feels good. I don't know why I thought it was much later in the week. Just realized yesterday was Monday. So it's only Tuesday. Wow. Vision was good. What's good? So if there happens to be anybody on here that um new, if this is your first time, you can feel free to ask questions about what you're seeing on the screen, which is the NADEX platform. NADEX is powerful. Right now we're just observing the market and really just looking to see what the environment and the behavior is looking like. Right now we're in a not really an accelerated environment, but we are in an environment that has more movement present. So you can see that, like the candles now, they're getting bigger. They're moving across strikes. So when you see that type of movement, you know that there's an extension of movement that's present, even though the market is not super fast right now. There's still more movement in the market, than we would want to be present for what we wait for. But it's cool. It's cool. It's good to observe so that you can develop discipline. This is how I stay sharp. Like exactly what you see me doing right now. This is exactly how I stay sharp. This is exactly what I do. Oh, okay. That's cool. That's cool, Otis. Yeah, Vision. I appreciate it, man. I appreciate that. Yeah, you can see there's more distance in the moves. So the candles are bigger ultimately because there's more distance in the moves. The moves are traveling further than they were earlier anyway. Um but the one thing I always say too is anytime that you create an expectation in the market, like like this is what some people will do. They'll say to themselves, all right, during the London session or during the US session, the market is going to automatically move faster. It's going to be volatile, yada, yada, yada. That's not true. That is not true. The market literally will do whatever it wants to do. So you can't really have any expectations when you observe, because whatever the market decides to do at the time is what will dictate what goes on at the time. And just because you're used to, or you have an expectation because of the session that you're in, like, just like I'm saying, a lot of people think that automatically during London and US session that the market is just volatile. That's not true. Yes, the market can be. The market may even have a tendency to be, but that doesn't mean that that's what it's going to be, period. Like, it's not something that's written in stone, like, oh, it's a London session. All right. Market's going to be moving fast. Not true. The market does whatever it wants to do. So observation skill really just allows you not to be like, you don't have any bias. You understand? You're not looking with expectation for anything in particular. You don't look and say, all right, well, I'm expecting more volatility. You don't know if the market's going to do that. It might. It may even do that more often than not. But it doesn't always do anything. So you can't just have an expectation and expect the expectation to manifest. You just got to observe. That's it. Just observe and leave it at that. Let the market dictate and determine what it wants to do. And then you, through your observation, apply what you know. Like, so for us, it's the protocol. We know that we're waiting for the market to stabilize. And we're also waiting for other things to give indication that the market is stable. So when those things come into fruition, then we know what we're ultimately waiting for after that, which is an actual trade to come. So if either the trade is going to come or it's not, the same way that either the market stabilizes or it doesn't. In any case, we let the market do whatever it wants to do, period. That way we don't have to worry about what's going on at the time, and we don't have to have any expectation. Like it's such a better, it's a much better way to do everything in the market. Just let the market do it. That's all. That's all it is. Bilal, what's going on, man? Yep, that is all it is. Just let the market be what it is. I remember when people used to ask me kind of all the time, "Oh, Mark, I noticed that you like to take your trades around 2 o'clock in the morning. Sometimes you take them at 10 o'clock in the morning." And they used to wonder how they were seeing me in trades and the market looked how it did at the time. The market was slower. And a lot of times, yeah, it was after 2, sometimes 3, 4 o'clock in the morning. And it always used to confuse people because they didn't understand that the market was doing that during the time when they have expectations for the market not to be doing that. Like, they're not thinking that the market's going to slow down, present what we're waiting for and all of that type of stuff. They just assume that because of the time, the market's going to be a certain way. And that's the worst thing that a person can do. Worst thing you can do is to have an expectation. Just don't expect anything. Observe. Let the market be what it is, and that's it. Chris, is there a correlation between markets determined by time zones and at least speed? And markets determined by time zones. When you say time zones, are you talking about? Oh, excuse me. Oh. You talking about time zones, or you talking about sessions? Like when you say time zone, you mean Central Standard Time and Eastern Standard Time, like that? Or are you talking about the sessions, like the US session, London session, just so I have clarity on the question. Time zones as in trading in sessions. Um, and if there's a correlation. Well, the significance of the time zones is that, and let me be clear with what I'm saying. The significance of the session that you're in has to do with which markets open during the session. So, for example, during the U.S. session, the U.S. stock market opens, like Wall Street and the NASDAQ. And when those markets open, they add volume to the overall markets. Volume can lead to volatility in the market. So many times when the market opens in a particular session, so for example, in the UK, I think that at 2 a.m. our time, the London session opens. That's when the UK markets open. Anytime a market, or I should say a market of a particular time zone opens up, it could potentially create volatility in the overall markets. And a lot of times that's what people will see. So the common thing to do is to associate the open of a market with increased volatility. You know, you're expecting now there to be more movement, more activity, more things going on. And that very well may be the case. But that still does not dictate what's going to go on just because the market opened in that time zone. So, in other words, just because a trading session began, it does not necessarily mean that certain things are going to happen. The potential for it to happen is higher, yes, because there's more activity in the overall markets. But it doesn't mean that that's what's going to go on. You know, anytime that that market opens up, it's just not what it is. It's kind of just like how the Asian session, people typically associate the market ranging and consolidating and moving slower during Asia. Is that always the case? Of course not. Of course not. The market ends up doing whatever it feels like doing. So you're really just observing whatever it's doing. And the mistake that people will make is that they'll put an expectation on what they want to see the market do. That's the worst thing you could do, is to have an expectation. You know, the only expectation really that you should have is to win your trades. That's it. That's a good expectation to have, because that's what you want. You want to be profitable when you trade, period. So you don't want to put your own personal expectations on the market and then make decisions based on what you think the market is doing. Like, all of your decision making has to be based upon what the market is doing, not what you think it's doing. And that's what so many people do as far as making mistakes. They make costly mistakes by doing that. Chris is saying, I was trying to understand the cause and effect of stability as a collective. What makes the indicative rise and fall? Okay, well, as it pertains to the indicative on NADEX, remember that the indicative on NADEX is an actual average of the buy and the sell side in the open Forex market. So, for example, right now, we're looking at this euro dollar. Now, the euro dollar is the open Forex market, we know, the underlying Forex market, right? Now, what will create the indicative price on this platform, and I'll pull up this ticket just so we can look, so we can see the indicative, right? The indicative is displayed here, this price, and it's one number. That one number is created by the average of the buy and the sell side of the euro dollar in the open Forex market. You see, it's the average of the buy and the sell side. This is interesting to see too. I want y'all to see, look at how the market is moving. Just watch. Market is moving crazy right now. It's moving crazy. You can see the pricing fluctuating dramatically. You see the indicative is moving all around the place because the market right now is not stable. See, like it doesn't even have that much to do with the fact that the market is accelerated. But what the acceleration in the market does do is it hides instability in the market. You understand what I'm saying? It's like it makes it difficult for you to see whether the market is stable or not. But the more time that you give the market and the more that you observe, you start to see it. So even though the market right now is accelerated, because it's actually accelerating now, it wasn't at first, but it is now. Even though the market is accelerated, people love to trade during this type of environment because they feel like it creates opportunities. And it does. But it creates a lot of opportunities to lose if you don't recognize instability in this movement. Like you understand what I'm saying? So basically the indicative is an average of the buy side and the sell side out in the open Forex market for the underlying Forex pair that you're looking at. So when we see the chart here and we see the indicative price here, this represents the average of both the buy and the sell side, or the bid and the offer of the underlying Forex pair that you're looking at. So we're looking at the euro dollar pair or the euro dollar market, right? The price that we see is the indicative, which is one number, and we know what that means. We know what that is representative of. It's representative of the average of the buy and the sell side in the open Forex market. So when we only focus our attention on this platform and on this chart, what it does is it gives us clarity as far as being able to recognize stability here. So it's kind of like asking, all right, if we see the euro dollar stable here as far as the indicative goes, is the euro dollar stable in the open market? And the answer is yes. It would have to be, because the indicative is reflecting the actual price of the market itself in the open market. So it's not that it's a different thing that we're looking at. The indicative is reflecting the pricing of the euro dollar itself. It's just reflecting it through one number, creating an average of both the bid and the offer in the open market. So it really just gives a lot of clarity when you understand the dynamic of it, which I just explained. It's very clear and it's very easy to understand. And what causes stability in the market, period, is when there is order flow on one side of the market that is greater than the other side. So in other words, the order flow for buys, it doesn't have to be a lot. It could be a small amount, right? If all right, let me try to clarify this a little bit too, just so that it's not confusing. If there's order flow and there's a lot of it, it creates more movement in the market. If there's order flow but there's less of it, the movement's less. Now, if the order flow is on one side of the market more so than on the other, that's the side of the market that you'll see respond. And that's why you'll see the market moving in one direction. But there are times when the market is not moving that much in a direction, but the movement that it is making in that direction is stable. And it's like, man, why is it moving nice and smooth and easy and consistent? Like it's committed to that movement. And that's because the order flow on that side of the market outweighs the other side. So what the market will create is stability of movement. See, and people will associate volume with stability. They're not necessarily the same. Sometimes volume will back up what creates stability, but not necessarily. In other words, the market does not have to be moving fast in order to do what I'm describing. And people will make the mistake of thinking that that's the case. That's why they like trading during volatility, because they want to see more movement. They're like, all right, well, I like volatility, but because I want the market to move so I can, so I can have an opportunity to trade. Well, they're doing it in reverse because they're not really looking at behavior of the movement. They're looking at volume of the movement. They want a lot of movement, but all movement ain't good movement. You see what I'm saying? So if the market is accelerated, it doesn't mean that the movement's stable. What happens when the market is accelerated, but the movement is going back and forth? What happens when the market has reversal energy in it? Reversals come from the way that the orders are flowing on both sides of the market, not just one side. So you see what I'm saying? Like you see how you can connect the dots by just thinking of everything logically at all times. It just makes it easy. So hopefully that was a good explanation. That was a good question. That was a very good question. JT, you just saw a purple rain for the first time, you said? Wow, that's crazy. That is crazy. Yeah, Chris, no problem. My pleasure. My pleasure. And it's kind of like this is the question I used to always get. People used to say, well, Mark, why don't you trade during sessions where there's more movement in it? Isn't it easier to trade? Well, right now you can see that there's a lot of movement in the market. And what I'm actually gonna do while we're on here, I'm gonna just look at setups. I'm gonna look at some different setups just so that you can see what the market does. Because people think that when the market is accelerated, that it automatically is going to push in the direction that you think that it's going in. Like, you know how like you'll look at the candle like, oh, okay, it's going down. What happens is people end up chasing the market. So it's like, all right, it's going down right this second, but the behavior of the market will back up the direction that it's in. Or bad behavior present will not have it won't be clear as far as the direction that it's in. It'll 1 minute it'll be one direction, and the next minute it'll be in the other direction. So it'll be like back and forth. It'll create back and forth movement. That back and forth movement is what be catching people. They get caught. They get caught all the time. All the time. So like, let me see. I want to see if I can pick something out. This might be a good one to use. Good example to use. Now, someone looking at this, this is the strike. Here you have one candle that goes above. Here one candle goes below. The candle that it's on now is above. Right? So now a person would look at this and now they're trying to get into a trade. So they're like, all right, well, the last candle was blue, so next one should be blue. All right, it's starting to move, it's blue. And they'll start looking to buy this, but then they'll see exactly what it's doing now. You see how it came up and now it's pulling back? They're chasing now. Watch. This is what they'll do. Oh, it's going down. All right. Oh, damn, it's going back up. Man. Oh, it's going back down. Look at how many times it just went back and forth just now. And what they'll do, they'll play around with this and they'll try to figure out what it's going to do at the end. So now they're looking at the sell. They're like, all right, look like it's gonna push down. I think I should take the sell. And they're literally looking at this, trying to force their way into a trade when there is no trade. This was nothing but a coin flip, literally. Literally. So they'll look at that and they'll say, all right, well, that one ended above. Damn, I knew I should have bought. Yeah, but you were chasing the sell, then you was chasing the buy again, then you was chasing the sell again, then you was chasing the buy again, right? You were chasing like 4 or 5 times, trying to catch the move. And that's how people get slapped all the time. All the time. Because they feel the need to want to trade. They feel the need to want to get into something. Like, I gotta take a trade. You know, market is moving, got volatility in it. This is the time to do it when there's nothing to do. Like there's absolutely no, it doesn't make sense for you to trade if it's a coin flip. And most people that are not in the know, they find themselves in those trades all the time. And they literally try to chase trades because then you'll have instances where the movement will be substantial and it'll look like, oh man, that was a good trade, man. That one, it was nowhere near it. It didn't come close. But when it's all said and done, it wasn't clear as far as how it did it. They're looking at the end result and then they feel like, oh man, I missed out on that one. I ain't gonna miss the next one. You see what I'm saying? So they just keep repeating that same cycle over and over again. Feeling FOMO. 1 minute they feeling like, oh, I should have took that last one. I would, I've been 2-0. No, like there's nothing to do in any of this. There's nothing to do. And when the market has so much acceleration in it and a lot of energy in the movement, like a lot of, momentum, it becomes more difficult for you to see stability. See, people don't even be looking for stability. They're looking for a trade. They don't even be caring about if it's stable or not. They just want to trade the setup. Oh, I got pricing. There's good pricing. Oh, I got a good price on that one. Like this is how they're thinking. So that's exactly how they'll manifest their trades. That same way, all over the place and reckless. Yep. So Easy to get slapped around. That's why I like when people tell me that they trade at these times. I'm like, I know what you be doing. You chasing. Because I know why you're trading at these times. You're trading because what the market has a tendency to do is accelerate the way that you see it now. And you think that it's easier for you to get into a trade. That's just what it is. Like, it's crazy. And they'll just do it over and over and over again. They'll, these are good examples to use. They'll look at this type of thing right here. They'll see all of this movement. They're like, yeah, it look good. That should stay up. I saw over here it stayed up. They'll do stuff like this. They'll draw little lines like this. All right, that one went up from there. Let me see. Let me zoom out. Oh, it's doing a W pattern. All right, so this one leg of it is doing the head and shoulders. So this should go up. Just silly stuff. Silly stuff like that. So they'll do just for that, based on that information, they'll come over here, they'll try to get into this going up. They're gonna want to buy. All right, I'm buying. So they look for a buy to get into, right? They're looking at pricing. Oh, I don't have pricing. Damn, I missed it. Dang, I missed it. Now, some people have FOMO so much that if this right now was to come down in price, like say this came down to 70 something, they would buy it. They literally would enter the trade because that's how much they feel that they're missing out. They got that much FOMO. Market be handing out slaps all day in this type of movement. Slaps all day. This one that somebody would chase right here with 2 minutes left. They'll chase this thinking this is a breakout. It's going to just shoot up. Yep. They will chase this. Oh, I'm getting in this. It's at 80. I'm taking this. They'll get into this at 80. Right there. Boom. Now, mind you, you see what the movement is doing. The movement has to come back down to give them that entry price. They'll take it anyway. They'll take it anyway because they think that it's going to push up. And like I said, it's not even like it's a matter of them knowing. They just flipping the coin. They flipping the coin. They looking at, all right, well, this is a strong move here. So it should stay up there. Okay. And it might not. They're looking at it, they feel good. They're like, all right, yeah, I got one. I got one. I got me one. Yeah, and like I use this as an opportunity to show what the market looks like when people sometimes observe and they have not developed self-control yet. They'll do the type of stuff that you hear me saying that people do. It's so weird. But yeah, clearly we wouldn't even be looking at any of this. You see the type of movement, you go to bed. But I'm using this as an example because there have been many times where people have mentioned that have taken a trade and they tell me the time, and I'm like 2:30 a.m. taking trades at 2:30 in the morning, talking about they thought the market was stable, and it's like, well, at that time the market has a tendency already to have more movement, and then that more than likely it may not be ranging during that time. Not to say that it won't, but they may not have a recording for it. Nothing. They'll just tell me, oh well, it was stable, but it reversed on me. Well, if it reversed on you, it wasn't stable. You see, like you need to be able to recognize things beforehand. Yes, exactly. Chasing the white whale. There you go. There you go. And chasing unnecessarily. Unnecessarily. It's like, why put yourself in position to be set up to get slapped up? Why do that? Just observe, just like, for example, we know that we don't do anything during this type of environment, period. Nothing to do. Now, when you're observing, you're only observing to see if the market, may decide to switch up its environment, may decide to stabilize. It might not. When you get tired of observing to see if that's going to be the case, then you just log off and go to bed. But while you're observing, you know what it is that you're waiting to see. And if you don't see that, then there's nothing to do. So you should never be doing anything. Because even when the market shows us what we're waiting to see, we still don't do anything until the market gives it to us. And I'm referring now to the actual trade that will unfold that we end up in after the market is stable. So just rinse and repeat of the same process. Yep. But yeah, I just want to reiterate that. What's up, Ernest? Somebody chasing. Somebody chasing would have probably tried to buy this right here just now. They saw a price in here in the 80s. Let me grab it. Market ended right on the strike price. That went to the seller. They didn't catch that one. Yep. That's one major thing that I find that people will do when they chase in the market, especially during these times. They'll try to catch movement. Mm-mm-mm. Might catch a slap. You think you'll be doing any more live training sessions? I'm only asking because of engagement. It's a great way to learn on live. We're limited to what we can say. Yeah, of course. I'll definitely do some this month. Yep. You what I've decided to do is to wait until I have something specific to train on and then do the live training. So I kind of haven't had anything really to talk about in specific or in particular, I should say. So that's why I haven't done one. The last one I did was 734. I forgot what day that was. That might have been December. If it wasn't December, it was early January. But yeah, I'm gonna probably do multiple ones this month. Because like I said, I want to cover things that are actually relevant. So another thing that I've been doing is paying attention to what has been going on in the group chat. Like I'm just waiting to see what people's strengths and weaknesses are. And of course, I'm going to focus on the weaknesses. So when I see what people are struggling with, that gives me something in particular to train on. I won't always know. That's why I always tell everyone to record and to share. Because when you do that, then I'll have an idea of what you might be struggling with. And then I can focus on that in a live training. Yep. Yep. They're coming. They're coming. Starting to see more wicks now in the candles. More wicks. This is an interesting candle here. Look, this one is red. It got a wick on the bottom. And this one is red. Got a wick on the top. Ain't that weird? How you got a wick on the bottom of a red candle? Like, explain that to me. How, like, explain this to me. Explain this one to me. There's a wick on the bottom of a red candle. What is that? That's crazy. Please don't start. It's okay. A beautiful setup. What setup? There's no setup here, man. There's nothing here. What's your setup? You selling this right here? You gonna sell this? Yeah, let's sell this and see what happens, Ab. Let's sell this one right here. So we want to see the price end underneath that green line. Let's see. See what it does. Ab is selling right here. Ab is 1-0. Come on, Ab. 1-0, baby. You took that one, Ab? That was a winner. That was a winner right there, man. Look, he says win. Here we go. Here we go. Come on, Ab. One more. Do it again. Come on, do the next one. I'll let you call it. Call out the next one. Ab is funny. Come on, Ab. Call out the next one, man. Ab is like, yeah. Ooh, look at that speed. That's gonna be nice. It's gonna be nice, but it's gonna be great. Setting up nice, huh? Look, he said, give me a second. I know you gotta check your email and all that. Ab gotta go check his email. He gotta go get his confirmation from NADEX real quick. NADEX is always slow with the emails, so he gotta wait at least 5 minutes. Oh snap! Yeah, that is hilarious. Ab is a trip. Come on, Ab, you gotta call out the next one, man. What's this one setting up to do, Ab? What's this one setting up for? Come on, let's draw some lines. So we got resistance here. It's gonna break above that. We got a breakout. What's up, man? Ooh, we got a breakout, Ab. You buying now? All right, come on, let's move this up here. You confident now to buy this one? You gonna buy this strike? Come on, let's take that one right there, Ab. Less than 2 minutes to go. Looking good for that long, baby. Come on, let's take it. Let me see what Ab said. He said, hold on. Come on, Ab, you in? Don't miss it. Don't miss it, man. Ab is in there. He's in it. He took this joint right here. He in this one long. Yeah, baby. He's like, yes. That's that breakout I wanted. You win it long, Ab? That's the breakout right there. Broke out that resistance. Pushing up, man. Looking great. 58 seconds left. Beautiful. Beautiful setup. Yeah, keep going, baby. Keep going. 36 seconds left. Oh, this is beautiful. It's beautiful. I'm 2-0, man. Ab, we 2-0, baby. Come on, Ab. We hurry get the email. Oh man, let me stop messing with Ab. Yeah, but this is it's interesting because like someone will do this type of thing like this. Exactly what you just saw me do. Like you kind of saw how I'm just looking at the candles. Oh, it's gonna break out. All right, yeah, it broke out. All right, I'm in. Like they'll make their decisions just like that, and because it'll work out, you know what they're gonna do. They're gonna do it again. So they're just waiting for another setup, right? Wait for that next setup and see what's up. And they'll trade just like that and keep trading like that until you know what happens. Crazy. Do less profit, less risk, more trades. Yeah. Yeah, that's kind of the ideas. That's the idea. That's why they don't ever scale up the size of the trades, because they keep doing this type of activity. They'll keep, searching for setups, and they'll keep taking setups until they get their numbers up on those setups. So they might go 4-5-0, 6-0, depending on the day. Maybe they go 8-0. But it's only a matter of time before that catches up, because that's not really a long-term way to go about approaching your trades. And really, if you ask me, all the trades that you're taking, if you're not really giving any value to them by scaling up your account, then that further proves that the trades that you're ending up in, you don't have full confidence in the trade. You just are looking for trades so that you can get your numbers up and get your profits that way. You know what I mean? And I mean, it's cool, but it's just that that's very inconsistent. It just is, because it's only a matter of time before you start getting slapped around and losing. And then when you lose, now you got to start over. You got to, you more than likely will start revenge trading, because you want to get that money back ASAP. Yep. Totally different. I totally disagree with that. App said practice and training are somewhat the same. Nah. Oh. And it's interesting that what you just said too. You said be careful of breakouts; they can reverse on you. Okay, but how do you know if it's going to reverse or not? Just like that one that we just looked at. Like how would you know that is not going to reverse? What's giving you confidence to take it? Or are you just taking it and hoping that it don't reverse? Like which one? How are you how are you making the determination to take it or not? That's my question. Always. Always. Excuse me. Look, let's look at another one. Let's look at one more. Here's a setup coming right here. Look at that. Look, you see that pressure coming down? You're feeling good about it, right? All right, boom. Let's take that one. We're gonna take this short. That looks good, baby. Look at that. Look at that. It's pushing. Yeah, we're gonna get in that right there. Boom. Let's take that. We got a minute left. Yeah, looking good. And boom, you go and take the trade. Right? You go ahead. You go right in. Now you got a minute left. What you do now? Oh damn. Damn, it was pushing down. Shit. Come on, push back down. This is where we start praying now, right? Our Father, who art in heaven, please push this trade back down. Please. I won't do it again. Just let me win this one, please. Right? And I'm joking, but it's not, like this is literally what you're doing at this point. Then you see it come back down, you're like, oh yes, it's going down. Come on. 10 seconds. Yes. It's back under. Oh man, I'm 3-0. 3-0. Oh no. Oh, did it come back up? Now you got to go check your email because you don't know if that shot back up just now. You thinking that it stayed under the line. Matter of fact, this is what you'll do. You zoom in like this, right? You'll say the candle's under the line. That candle, it closed under the line right there. Let me check my email. Then when you check your email, if it don't show this, who you calling? Hello, NADEX? Oh man, let me stop messing with y'all, man. Oh man, these are the chronicles of a trader's life. Man, so glad. See, eventually you stop being a trader, you start being an actual observationist. Learn how to stop trading. This is what trading looks like. I mean, who wants to do this all the time? I don't want to do that. I do not want to do none of that. Just now, that's real. What I just showed, that's exactly what people be doing. The whole thing, the whole scenario I just showed you, people go through that. Insanity, man. Insanity. Nah, you ain't calling me. You ain't calling me. I ain't had nothing to do with nothing. Yep. Yeah, but I mean, it is what it is, though. All right, y'all. So I just came on just to observe for like an hour. So I did that. I'm gonna wrap it on up. Get ready to go to bed and all that. All right. So I'll see you guys mañana on the podcast. Yeah, make sure that you're tuned in for that. And that's about it, man. That's about it. Yep. All right, y'all. So I'm out. You know what it is. Mark Fuller, TeamAlliance, live market observation. Peace. Dom de Marco, Dom de Marco.